David here with his weekly week look. Today is Thursday the 20th of June and this video goes at 3:40 and we'll be looking at the November 2004 to this week. And here's the current live chart we've got at the present moment, and you can see that we've fallen right down here to touch 164. We didn't quite make our target down here in gap fill at 160, and now we've had a bounce back up, £4 or £5 a tonne bounce back up here, and we're trading at 169. Obviously this is at the present moment. Now on here I've got marked 4 black lines, and this is I'll show you how I've arrived at these lines here, but basically this is the 50% retracement here at 169 where we are at the moment. This is a low of 138 and a high of 200 for this current November contract, and this gives us a 50% retracement here. Above us we've got 38% retracements at 176, and we've got the nearest moving average here, the 20-day moving average at 173.72, and obviously we've got the bottom line here that coincides with our gap here down at 161, which is the 61% retracement for Fibonacci. We've got the gap here clearly marked, and obviously we've got a gap here back in December of 2012 at 142, which sometime will get filled. And also with this recent rise up here, we did get a small gap left here at 165. So I could see this being filled over the next 2 weeks as we then come back down to test and eventually go down to test our target 160. Now I'll pull up here my next chart here, which is a long-term chart. Now this is a stitched together chart back to 2007, so over a 5-year chart, and you can see here that we've had a high of the wheat over the last 5 years up as high as 225, and we've had a low down here at 75 in June of 2007, and we had the recent low was down here at 2009. So I've taken the recent low here and the recent high here, and this gives us a 50% retracement at 157, which obviously is key here to 106, just above the 161, which we're looking for of our target figure on that November contract. And you can see here 38% retracement, 173, the gap here, and that is obviously where we're looking for this bounce to sort of end on that November contract if you come back to it. And we're looking here at a target here of 141. So that's where our ultimate downside target will be. Now coming forward a bit here, we're now bringing forward to the current November contract on a weekly basis. So this gives you the whole length of the current contract. And you can see the low here of this contract November was 138 and the high here was 200. So this is where I achieved my 50% retracement level here at 169. And you can see that this line here, 161, is the same on the big long-term look at just below 100 at 157. So they line up quite nicely, and that's why I achieved my ultimate lines here that line up within this November current trading as we are at the moment. Now on this chart here, I've put the 3 red arrows, 3 actions that are more likely to happen at the present moment. Obviously we've got a bounce here, this red line here up to 170, then back down to test 160, a straight down fall, or a further bounce back up to 176, test this moving average here, 173. The last 20 days, the average is 173. You can see that when we got down to 164, we were well and truly oversold, so we were due for a bounce. And you can see how the market always comes back sometime or other to test this moving average. So if I was looking to sell at a level, I would use the 20-day moving average as my indicator, and I would say, right, I'd look to sell if it tested this level again, say at 173, because it's the last 20 days, simply it's an average of the last 20 days price. If it get back to there, it's a good level to sell at, and that's how I'd use it. And see how it's worked over the last 5 months, and it's worked damn well really, and kept you within the market. So I wouldn't be surprised if we do see a bounce to test this level at 173 and then come back down. But obviously we'll keep an eye over it, and I'll put an update this time next week. Thanks for watching.